Good morning, everyone. Welcome to the Quantum Leap morning leap session for Tuesday, February the 13th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plans. We do create multiple trade plans. We do not know what the market's going to do. Therefore, we create what would be a normal market auction based on who's in control. We have two main hypotheses based on buyers or sellers taking control. Then we have two expanding hypotheses when we get into a trend type environment. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So, taking a look at yesterday. Yesterday, our main hypothesis was a open auction in range, a push up into the 43 to 46 area, a rotation back down towards the main target, which was our 30, 50, and then a push down possibly to fill the gap. Bet down to this 20, then finding a base and start working up and chopping between the 23 and the 43. Hypo 2 was an open auction, a push down into the 30 to 20 area, and then finding buyers and rotating it up into that 43 and going sideways. And again, we were looking for a rotational day. Hypo 3 was an open test drive, failure to close the gap, and they push up into the year open, which was up at 75.75. We kind of got a combination of all three. I mean, Hypo 1 basically played out, then we got into Hypo 2, and then once we broke out of the IB, we pushed up into the 75. We didn't quite get there. We got to 71.50. It was a rotational day, definitely. Again, the average rotations are still very big. You can see that if I look at the average rotations from yesterday, the average rotations were 10.5 combined. And they were pretty equal, 10.75 up, 10.50 down. So, very much a rotational type scenario. Taking a look at the overnight, our overnight inventory is about, I'd say, 90% net short. We opened, basically right. We had a VPOC shift into the close, shifted up to the 54.50, and we closed at 54.75. We opened, pushed up into the 57, failed, came down to that 46 level, which was the midpoint from yesterday, and the LVN. Found buyers, but failed to hold above the open. They failed and broke down, and now we're pushing our way back towards that 34, 35. The VPOC spent a lot of time down in the 26.35 yesterday, and we're working our way down to it. Very toothy, large rotations again in the Globex. Currently, right now, we had a 51.50 full session range yesterday. So far today, 59.25 and 36. So we have another 23.25 point range so far in the Globex. little smaller than yesterday. Yesterday we had a 32 point range. Going to the macro, I like to always take a look at a simple candlestick chart. Where's my macro? And I use a 9 EMA and a 20 SMA on it. I start with the monthly. I want to see where we are in conjunction to that time frame's trend. Do we have good slope, good separation, and strength of trend? You can see on the monthly we had 14 months of one time framing up, and then this month so far. And this month's range, as we stand right now, our month high is 28.30 to 25, and our month low is 25.29. We have a 308.25 point range. That is something we haven't seen in I don't know how long, that big of a monthly range. But the key is we only came down and tried to challenge the trend, but we bounced so far off of the 9 EMA. So you want to pay attention to this 25.90 area. If we get back down there, because if we do break below that, there's a longer time frame microcomposite that I'm going to talk about, and the possibility of coming all the way down to test the 9 EMA, which is in the low 2400s. Going to the weekly. Weekly, we are below the 9 and the 20. We were watching that 62 area yesterday to see if we could get back above it. We didn't hold above it, and we're pushing back down on the daily. So the trend, possible trend change in the weekly. In the daily, you can see that we do have a trend change. We've got slope and separation to the downside. The 9 EMA is now at 77 77.25. We're going to watch that. That was yesterday's actual. It was 77.50 was our daily upside ATR target. And remember that our year open is 26.75.75. So if we do get above that, we're above the year open and back in positive territory and above the 9 on the daily. But until we get above the 9, you can see that the trend is down. Going to the intraday. You can see that the intraday is in this consolidation. Now, the consolidation is rather large, but it is a consolidation, and we're testing both sides of it. We're right now holding above the 9 and the 20. We have no slope, no separation, so it's no trend right now on that time frame. Going to the 30-minute. You can see the same thing. We're just since the open, we're basically just chopping. We've got no slope, no separation. So we're in this area of repairing the longer time frame. If I go to the composite and look at the structure of the market, you can see that the last 6 days is it 6 or 7? Let me just put this to the back. 1, 2, 3, 4, 5, 6 days. Our VPOC is just above us at that 43.50 we were talking about yesterday. Yesterday, that was our over-under line. But if we look at the longer time frame, if I go back from the breakout of this balance all the way down here, setting around that 2,500 level, the most traded price, or the microcomposite VPOC that starts from October the 3rd through to yesterday, the most traded price is still below us down at the 25.81 area. So if we can't hold this area, we're likely to start moving ourselves back down towards that level again as they look for buyers to step in that are not taking control yet. We're in a two-sided price discovery right now in this thin, blunt area that we've been talking about forever that would have to come back and be repaired. And now we're coming back and doing that repair and trying to determine fair value. Key levels to look at, and I know it's hard to open this up and expand it. Obviously, the 43, definitely the 28.50 and 30 level, anywhere from 28.50 to 33 actually. That's going to be a key area. You can see that we have a upper wick and a bottom wick. So if we get down in this area between the 19 and the 40 area, we could get and spend some time as we mature this part of the auction and determine fair value right now between either 33 or 28, and this will probably end up as one distribution zone. So one of my hypotheses today is going to be coming down here and getting stuck in this area between the 43 and the 28, maybe down into the 19, and getting stuck in the wicks right here as we mature this distribution zone here. If we can come up and accept that 43 again, then I'd be looking for a push back up into the 50 area and back into the main body of yesterday's range. So taking a look and starting to move our numbers over, taking our overnight high, let me just move this over. Our overnight high is up at 59.25. Our overnight low is at 36. Our VPOC could shift, but it's not going to shift much. It's going to be around the 41 to 42 area. It's currently at 42. And there's not a lot. I mean, it's pretty toothy, but it's also pretty balanced around that 42. There's an LVN here at the 43.50, and because the 43.50 is the microcomposite VPOC, that is going to be my over-under line again. Now, you could use the 46 because you've got the 46 and a quarter, 46.50 area because you've got the LVN in the mid from yesterday. But I think there's a trade up into that if we get above the 43. So I'm going to use the 43 as I did yesterday, 43.50 as my over-under line. In terms of trade level, obviously the mid and the LVN here at the 46, and then I'd be targeting the 54 area. And in that case, below the 43, we've got the 42. We're currently trading the 49, but we're going to be targeting that a break below the 36. We're going to be targeting that 34. And the 30. 30 is going to be a trade level, and 30.50 and a target. Below that, we've got that 28 level. And a key level here, which is going to be my over-under line at the 19 area. I'm actually going to move it down to the gap close. So this is going to be my key line in the sand. Because if we get below that, if I bring back the micro composite, if we get below that 19 area, then I'd be looking for a push down into the next big target below and a test of the 2600. And then below the 2600, let me get this out of the way first. Below the 2600, I'd be looking for a takeout of the naked VPOC at 2590, and then of course the bigger long-term micro composite at the 2580.75. Is it? Got to get that to verify that. Is it 80 or 89? Composite. It is 80.75. Okay, and then our 20-period full session daily ATR run is running at 55.83. So that's a huge range. It continues to expand out. It's 26.59, 25 minus the 55.83. Our downside daily ATR is at 26.0350. And off of the low overnight of 36, our upside daily ATR target is at 20. No, that can't be right. Is that right? 36 plus 55, 83. 91.75. Levels to the upside, of course, is going to be the 54, the overnight high of 59.25, the value area high at the 65. There is a target at 62 still. Come on. And then above 71.50, the year open at 75.75, and then that 91. So in terms of hypotheses, I'm again looking for a rotational day today, although I'm looking for a rotational day with a downside bias. So I'm looking for an open auction in range, in value, a move up into the over underline the 43 and somewhere between the 43 and the 54, looking for responsive sellers to step in and rotate us down towards that 30-50 target again, very similar to yesterday, and a push through down to test the 2620 area, and then possibly basing, that is, and then working our way back up towards that 30-34 area. That is hypo 1. Hypo 2, because of the volatility like yesterday, got to have pretty equal weight. We could see both play out. Would be an open auction in range, in value, a push down to take out the overnight low, and somewhere between the overnight low and that 28 area, finding responsive buyers, rotating us back up towards that 54 and coming up into that 54. The hypo 3 is a breakdown day, failure to close the gap or take out the overnight high, find strong selling, bring us down into that area, chop around in the 30, and then fail, push down into testing the key line in the sand, failing and pushing down towards that 2600 area. So that is hypo 3. And hypo 4 is a open auction, in range, in value, failure to take out the overnight low, push up into the 55 area, chop around here, take out the overnight high, push up into the 71 to 75 area, chop in this area, and push up and continue the move back up on the monthly trend, which is still up. That's a lot to go through. I'm going to try to cut this short today. Just take a quick look at the calendar for today. We've got Red Book that just came out just before 9 o'clock. We've got the 4-week bill auction, and we've got the crude oil at 4:30. Why is it so late? This is today, right? Tuesday, February 15th. So not a lot of news. Again, we are coming up into this whole debate with the U.S., their debt and the budget. So we have to see some headline possibilities coming in, but not a lot to move us in terms of economic news. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.